Good afternoon, traders. I'm Michael Sabo with RJO Futures here on April 22nd, bringing you some commentary here in the energy market. So let's get started. Crude prices right now, the June contract's about unchanged. We're trading around $56.60 a barrel. Brent is up about a little over $1, trading around $63.15. Nat gas up 1 to 2 cents. RBOB really getting steam behind it here. We're up a little over 4 3/4 cents right now. It's about a 2.5% move higher. Heat's also firmer, up about 2.5 cents. So, the big news of the day here really is this EIA data that came out earlier today. And, when we take a look at the crude stockpiles here, we saw a build in crude stockpiles about 5.3 million barrels, which is almost double what was expected. But yet when that news came out here, we actually saw crude prices actually kind of jump about 50 cents. And part of the reason for that, I think, was that when you take a look at the build over in Cushing's, Oklahoma, that was a little bit smaller than expected. But I think the big thing that was kind of driving was you take a look at the unleaded gas, or the RBOB contract. And I've talked about this in prior posts here. We've seen really strong demand in the RBOB sector, and they were looking for a draw there of a little over 800,000 barrels, and that draw came in at about a little over 2.1 million barrels. So certainly some pretty strong numbers there. Demand looking strong here for the RBOB. And when you look at the refinery capacity utilization, this is something else I've mentioned in prior posts here. Refinery capacity utilization here in the last 5 reports has been running year over year much stronger. So what we're seeing is at the commercial level here, the demand has certainly, in my opinion here, has been increasing and staying strong there. And so I think that, that eventually that will start to eat in the supplies. Now, overall stockpiles here in oil, obviously, I think we've got a tremendous amount of oil out there. But yet you look at the price trend here over the last 30 days, and it's basically been steadily moving higher. We've seen some pullbacks in the market here. These last couple of sessions, the market's pulled back a little bit, but it's holding on the 10-day moving average. And the technical side of things, a couple weeks ago, we saw the 10-day cross over the 50-day. Today, market came down, touched on the 10-day, and we're seeing it kind of just shy of the 200-day moving average. So, this is kind of an important area right here. If the market can hold on this 10-day moving average, we could see crude prices possibly pushing here, I think, towards that $60 a barrel area. Certainly I think there's a little bit of fear premium being built into the market, in my opinion. You take a look at what's going on right now in Yemen. You have U.S. Sending some of their ships over there, some of the naval fleets heading over that way, as we're seeing them kind of tracking some movements coming out of Iran. They think that there's a cargo shipment of some heavy arms that's heading to the rebels there in Yemen, and so we're sending our Navy fleet, portion of it, over that way, and so that could escalate a little bit more. We've known about the missile strikes from the Saudis into Yemen, some targeted areas there. So there's certainly things could potentially heat up there a little bit. So we got to watch that and see if that causes any. I don't think so much really supply disruptions as much as just overall the way traders could potentially react to that, building additional fear premium into the market here. So certainly something to watch here. But if you're interested in hearing about some trading ideas, some strategies on how to take advantage of the market, shoot me an email, give me the call, or give me a phone call. We can get into more detail. Futures and options on futures may involve substantial risk and may not be suitable for all investors.